Hi everyone, weekly stock market update, and for the first time ever from a plane. So I'm hoping this works, because we're actually recording as I speak. So let's get on with the various stocks. I'm going to make myself a little bit smaller out here. Price to forward earnings. Now that's going to be a measure of valuation, of course, just how much you're paying for every expected dollar, and you'll know what this is. So energy looks cheap, drug manufacturers largely look cheap, communication services company look cheap as well. You can see what looks cheap, so we're going to deep dive into that in a second. Now, for those of you not on the approved list program, just to explain to everyone else, I won't just look at the charts in this, I will actually be looking at 10,000 stocks value, growth, income, cash return on capital invested, and everything else. So you will get the whole shebang, as it were, of all of those things. And you're also going to get my analysis based on the charts, of course. So over the past week, a lot of green. Some tech has come off, and it's quite unusual because normally tech tends to be highly correlated. But that, plays to the lie that people often tell themselves that, oh, I've got to be diversified. Well, how come Google's falling and Apple's rising? Given that they're in different sectors, you've got to ask yourself, how's that happening? And given that they're in pretty much the same sector, you might say communication services and consumer electronics, really tech. So that's why I don't worry too much about this whole diversification story at all. It used to work in the 60s, which is where most people got their knowledge, and then it just got repeated over the years. Okay, so let's look at more specifics on all of this. What do we have? My video seems to have frozen, but don't worry about that so much. It's less important. I'll see if I can make myself appear later on anyway. Exchange traded funds, 1 month performance, lots of green. As I said, I will do a future video on any of these that might look interesting for those particularly interested in ETFs. Let me know if you do want to see that. Year-to-date market, NASDAQ 45%. What a year. Great for a lot of people with pensions, particularly if you're on the Great Investments Program and you started in January or before. But don't worry if you started more recently. That's the whole point of it. We're going to make sure you keep getting those returns. S&P 500 up 19%. So again, similar great story. Like I've said, when I've looked at these, which are the best performers over the past month, I've not seen anything that I've been particularly excited about in these special situations, but just highlighting them. And I will do a broadcast on that as well. A lot of broadcasts I've got to do for you, so keep an eye on YouTube and Telegram for those. Now, S&P 500 seems to be taking a bit of a pause. Like I said, I expect it to do this, then that. And I guess, in a way, the big clue that it might have a short-term fall is the weekly stochastic, which tends to be overreactive, a bit premature, is now looking overbought. And when it's done it in the past, like here, you can get a move down. Now, it can stay overbought for a long time, so it could continue just rising. And over the medium to longer term, I do expect positivity in the S&P, so I'm not so worried. We still need that to go up a lot more before I turn positive on it. But for now, direction is that I'm expecting. Now, Apple's strategy remains the same. Is it buy, hold, or sell? Well, it's certainly not sell. I've already got some, so the hold is there. And if I didn't have any, I would still be buying, even though, and I really need this monthly MACD to stay above I need to stay above the yellow signal line, which it is doing, because then that's positive, and to continue upwards. Don't forget, I've also looked at fundamentals in all of this. So there's your Apple strategy. Alphabet, similar to the Apple strategy, I need to stay above. Now, ideally, if it's like this, that's very positive. Give that 2 ticks. If it's sideways like this and overbought, at least it's not fallen. But if it falls below, that's negative. So that's bad, all right? So put it into simple language. At the moment, we're not in that, we're more in that stage, but thankfully we're not in that falling stage with these, okay? So some clarity, would I buy, hold, or sell? Still do the Apple strategy with it, which I've just explained, and same with Microsoft, except this is a bit more positive in that they're rising, so it's in that phase. However, it's getting closer to being overbought, so just got to be careful. It may well do this and then that before it drops. Now, I'm not saying it's going to drop, but that's what we do our weekly broadcast. But if it did, we'd want to get out around here as we did in 2021, and then look to get back in there as we did in 2022, and then get back in 2023. Amazon, same Apple strategy. Looks more attractive because there's a lot more space to the upside, and that's very much in that direction, not this. And certainly not this. So I would definitely buy more of that, if anything, at all. Disney, well, we did a special situation on it. It's already started falling back. But anyway, that's the direction we're looking at for that. Nvidia, you know what the Nvidia strategy compared to the Apple strategy is. If it drops X%, you will sell Y% based on your risk appetite, because we can't see into the future. And it is overbought. The great thing about doing these broadcasts on Wednesdays and Fridays is you get a lot of education. And this is worrying now that this could happen. So keep an eye on that. Keep a very close eye on Nvidia. Based on your risk appetite, you don't want to get out. You can see the brokers are saying 40% return potential if it goes from there to the average broker predicted price, though some have predicted that as a high, which will happen at some point in the future. But we don't want to have a big roller coaster, snakes and ladders. You don't want to ride it here and then ride it all the way down. Even though we don't trade our investments, we do look at them at least once a fortnight. Okay, so there's your Nvidia. Tesla, as you know, I got out of, and it's now started resuming backwards, which is fine, because that just worried me a bit, and I wanted to get out, and the volatility worried me a bit. Now, Meta, overbought, but we'll probably do the Nvidia strategy with this and the Apple strategy for now. So a combination of both, which is if you've got a gun to my head, I'd buy it, but if it drops X%, I'd look to get out Y% based on my risk appetite. If you're very risk averse, you'd get out 100% if it drops 10%. If you're more risk neutral, you'd say if it drops 25%, you'll get out 100%. But I'll keep watching it every week for you so that you get a better idea. ServiceNow I like as well, and it's very much an Apple strategy, very much like Amazon as well. Lots of upside room, fundamentals solid. You can see what the banks think. Whoops, over there. Okay, now Cisco fell off a cliff, hasn't fallen further, and sometimes these stocks do this, and I've explained it in the past. So it doesn't look like a hard drop, but if it did go any lower, then it would be. So it looks like a potential rebound like it's had before, and it does those things. And we don't trade our investments, so we didn't panic, but we'll watch. And this is still sideways. It's not up, it's sideways, but it's not down. Okay, so there's your Cisco. Netflix, I don't own, but I cover it because a lot of people own it. So that looks all right. And you can see it goes through these cycles, so be warned. You might be getting in here, it drops, you panic, you get out there, and you miss the ride. But that's why I like to show these charts so you can understand. That's what all the banks think, lots of buys, and that's where we are on that. Have a look at alpeshpatel.com/links and campaignfor1million.com. Like, follow, subscribe for more. Don't forget. See you soon.